everyone. So this is the Lifestyle Home Team, and today is our first episode of Keeping Up with Real Estate. So we're super excited to kind of share some of this guy's knowledge with you. I can't believe I just said that statement. But yeah, we just wanted to kind of go over some different things and just talk about what's going on in the real estate market and how that's affecting things in the financing world as far as getting the loans and getting you into the home that of your dreams, I guess. So, welcome, Todd. Thank you for coming again.
Thanks for having me back.
So, I guess today, just several different things that I wanted to kind of pick your brain about.
Okay.
First one that I think was kind of coming up with some clients is everybody gets a little worried when we talk about interest rates and things along those lines.
Yes.
So, first of all, just basic question. How do you guys determine an interest rate? Like, what do you guys, that's the first question I get from every client is, what will my rate be?
That's the question I get from everybody, and they say, hey, you're in the mortgage business? Yes. What are the rates like? Well, I don't know. It's $1 million question because everybody's situation is different, right? So there's a lot of factors in it. One's going to be your credit, obviously, first and foremost. And just by a couple of points, by working with us, we can improve your credit to help you get a little bit better rate. Secondly is going to be the down payment. Third is going to be your loan type, and a lot like debt to income ratio. So there's a lot of factors that go into it. So when you see an ad that just says the rate might be this, well, it's not always going to be what's in that ad because there's so many compensating factors that go into it. So a rate's kind of like everybody's fingerprint, right? And everybody's situation is going to be a little bit different, unique. That's what your interest rate's going to be based on your situation.
So everybody's is different, but I guess what is a good rate today? Like, what do you think is a great rate?
I mean, if you're
perfect scenario.
If you're a perfect scenario conventional loan, if you're, in 4.75, 4.625 right in there, you're doing really well today. Anything below 5% right now, you're doing well in the marketplace in today's rates.
Okay, that's good to know. And so with that being said, we always hear, the feds are going to raise the rate. They're going to raise the rate. What does that do to somebody's purchasing power? I think that's something that's very important for people to understand.
Right.
A 0.5% increase, and it depends on the price point, but let's say if you're a first-time home buyer, you're out there looking at that $200,000 price point, you're struggling to find something, honestly, in this market. If it goes up a 0.5%, what does that do to your buying power?
It's going to increase your payment, probably, let's say on a $200,000 house, generally about $50-$60. And so what that means for you is when we're figuring that debt to income ratio, whether or not you qualify or not, it's better to jump in now. Well, the rates, you still get that good rate. Years ago, and I asked my mom their first house, they were paying 14-15%.
Yeah.
4.75, 4.875, 5% is a good rate today. And so, but it can affect that $50, $60, $70 depending on your loan amount, and could take you right out of that house that you wanted. Now you may have to come down on your purchase price or come up with a lot more money.
Yeah, so more down payment is what you're going to come up with, or you're going to have to adjust your purchase price.
Yeah.
So Ryan just asked, what can I do to improve my rate?
One of the things is going to be credit. That's always like the big question is, believe it or not, you can have somebody that's at a 705 credit score and somebody at a 725 credit score, and that can be the difference in an eighth of a point to a quarter of a point in interest rate. So what we do at InterLinc is we look at what's your credit improvement, and it might be something as simple as paying down a $300 credit card that could potentially save you thousands of dollars over the life of your loan.
Okay. And so with that being said, I know you had, and I was trying to find it, you had a really awesome cheat sheet for us last time we were talking, and it was talking about, just different ways to get into the house. It's like, obviously we have the FHA, we have VA, we have conventional.
Yep.
What are you seeing the average person put down on a conventional loan?
Right now, believe it or not, it's generally, if it's first time, 3%.
Unconventional.
Unconventional, yeah.
3% conventional?
3% and 5%, yeah. So a lot of people just now, young families. I'm getting families that are still established, maybe buying that second home, doing a 5% down. Where we're at in the prices and the economy's doing very, very well, which is great. We're seeing tons of new jobs, especially here in Tampa. The growth coming in. But they just don't have the ability yet to save like we were in the past. Our parents were able to save a little bit more. So that 20% down buyer, we don't see them as much. Maybe 2 out of 10
Okay.
But a lot of 5% down, people 3 to 5% down on the conventionals now.
Okay, somebody is just putting, I'm getting comments on here on our Facebook. Corey asked, rapid rescore with InterLinc Mortgages, get your scores up. So what is the rapid rescore?
Rapid rescore is what I mentioned earlier. So what's great about rapid rescore is we can go in and look at your scores. So like I said, Mitch, maybe you're at like a 680 and we're trying to get you over 700. There may be a small credit card, one little debt that's out there that it'll tell us what to pay down and what is going to increase your score. So I just had a young lady this morning. She literally went from a 580 to a 634, doing what we told her to do from February 1st to today, and we saw over a 50-point increase in her score today. Now she'll be able to
That's the
buy a
difference
house.
between not buying a house and buying a house, and that's your
Absolutely.
point.
And when I made that phone call on my way here to see you guys today, she was so excited. Now she can finally buy a home.
That's awesome.
So what do you think we can do, like what do you wish that you would see real estate agents do to help, get people into the home, and when we get these questions, I guess, what's the biggest misconception that we're doing and what can we do to help?
I think what makes you guys a great partner is that we handle the mortgage side of things and you guys handle the contract side of things. We try not to get into it. The good thing is you guys are pretty educated on your loans. The one thing that's the biggest thing for us is encouraging them to talk to us up front. Not be in such a rush sometimes, maybe if they're self-employed, maybe if we have a couple little credit challenges, to maybe let us run it through the underwriter and give us 24 hours to get it back to them. I know sometimes we are in that crunch where there might be multiple offers and we need it right away. Let us take a good look at what they have up front, and that way you guys aren't going to be surprised later on, and we're not maybe going to have that disappointed buyer, or you guys aren't disappointed, we're not disappointed. Let us gather as much as we can up front to make sure that we have a good solid, pre-qual before it goes out the door.
This is a conversation that I have with clients all the time, and I know you guys run into it too, is, for some reason, well, I should say for some reason, I know why, people think that he's this big scary guy and they don't want to call, or a lot of times, people will call us and want to see a house, and of course the conversation with financing always comes up and they're like, well, I don't want to run my credit or anything until I find a house. Well, first of all, the house could be gone by the time you even
Right.
talk to somebody. So you definitely want to be pre-approved, but also really truly understanding where you're at. I think a lot of people, they go online and they find these mortgage calculator things, and in their mind they come up with this figure and they think that they know what's going on. And the best advice I can give anybody that's out there looking to buy a house is get on the phone with these guys right away. And you don't have to go all in just because you talk to them. They can look at your situation, they can advise you on what to do. If you have to do a rapid rescore or something along those lines, they can help you. Maybe you're trying to save 20% down and you can qualify for something with 3%. I did see Kelly had a question, so what was your question?
How soon after bankruptcy can a buyer qualify for a loan?
That's a great question. There's products out now where they can actually qualify one day out of bankruptcy.
One day.
One day out of bankruptcy. There are non-QM products out there that they can do that. It's an FHA loan, as long as they've been making payments consistently in that Chapter 13, if we get approval from the trustee, they can buy while they're still in their Chapter 13 bankruptcy. Generally, it's about 2 years on FHA, so we're generally trying to look at every situation, again, is gonna be different based on that buyer's individual situation. But yeah, nowadays, you can do one day out of foreclosure, one day out of bankruptcy, so.
That's crazy.
And the one thing I'll do is encourage the people to
That's
call
very
us
encouraging.
up front because, like I said, every situation is different. We can walk them through the process, and that way you guys know what you have and let us work with them. And in the pre-qual process, to give you a perfect example, Nick's buyer that we're gonna be closing at the end of this month, she called, she's from out of state, and I said, hey, we're gonna be kind of tight on that debt to income ratio. Could you give me a couple addresses you're looking at so when we can pull the taxes, we can pull the HOAs. She sent them over and I said, you're not gonna qualify for this one, you will qualify for this one, and that's what they submitted the offer, we got the deal, and we'll be closing here in about a week and a half.
And that's why it's so important too, to have them give us those parameters before we start going out and looking at all these houses, because there's so many instances where some houses qualify and some don't due to the program they're on,
Right.
and or their debt to income as well. Don't you have a program also where we can underwrite the client before, so it's like
Yeah.
it's more than just a pre-qualification?
Yeah, I've done it many times where if you just, maybe they have a couple of credit challenges, a couple little hiccup things that we just want to make sure that it's done. We can get you a full pre-approval. We're pretty fast in our underwriting times, 24,
Yeah.
48 hours. And now when you go, you know that the underwriter's already overcome all of those challenges for us, and now you just gotta go find a house and you're ready to go.
And
So
that's
I
a
think
great
that was
thing
everything up
for
front.
when, especially, we see a lot of multiple offers in this market right now, so that's a great tool to have. And another thing with, when you work with somebody like Todd, I can say, I've had instances where we were in multiple offers, and I knew we had gone through that much of the process, and so instead of just sending over a pre-qual letter, I actually called Todd, I'm like, Todd, I need you to get on the phone and call this listing agent and explain to them that we're there, and that was the difference between them getting the deal and
Right.
somebody else.
Yeah.
And so that's where they can really be a huge valuable asset to,
Because guys, when Todd can call the listing agent, for example, and especially if we're in a multiple offer situation, and Todd can call and say, hey, listen, this buyer, we've underwritten the buyer already
Right.
to an extent, we verified their income. That goes a lot further than someone else that just presented an offer with a pre-qualification letter from pick any company that you can get online, type in your name and info, and it'll spit you out a generic pre-qual letter. So
Right.
in the real estate world, that holds a lot more weight than the ones they just spit out online.
Absolutely.
and I know on our listings, that's the first thing we do is we make a phone call to the lender.
Right.
Because
To
we
verify
wanted
the
to
strength of the
verify
buyer.
the strength of the buyer,
Exactly,
because
yeah.
we don't wanna take the home off the market. So, I saw something on here that somebody posted, I'm trying to go back. Oh, but back to the point of the whole qualifying based on the, how one house can qualify and one house will not. I think that's something that's very unique to our area. You have the HOAs, the CDDs.
Yes.
You can literally cross the street and be in a home that you can qualify for, and the next
Absolutely.
neighborhood over you won't. So,
Right.
when we bring that up, that's why there's a lot to consider in the process, not just the price of the house.
Right.
Kelly just asked, go ahead.
What are the current jumbo loan limits at?
It's at 453,200 is now where you're at.
So that got raised.
That got raised.
Okay.
And so there's some creative ways we help with that as well. So let's say they've got 10% down and we're maybe at like 475. We may add a second mortgage on there at closing to make it work so that they can get a conforming loan, a little bit easier to qualify for. Believe it or not, the rates are kind of better right now in pricing. The jumbo rates they're not doing as well. There's always challenges in the jumbos. One thing we like in the conforming is that everything stays in-house. Sometimes when you're working in those jumbos, you do have to sometimes broker them out, not always. We generally underwrite everything in-house. But we always, as you know, we always want to keep control as much as possible, so that, as you guys see in our expectations calendar, we want to make sure that we're going to be clear to close in 20 days or less. We want to make sure that process is smooth and easy for you and get your value the best deal possible.
Okay, great.
And speaking of the process,
Yeah.
I think that this is something that a lot of people, we just get into everybody wants to get to that contract. So now let's talk about the process and actually I think this is another thing that sets your company apart, is that you guys have a great process with educating the buyer and keeping in contact with them.
Right.
Let's say, somebody's working with you, they get under contract, what should they expect during the loan process?
Well, first off, up front, we're gonna let them know that we're gonna be up front, but we also have some partners. You guys know up front, as soon as you get a contract, they automatically go to Angie and Jessica as well, our loan partners. Without them, it doesn't happen. Angie Mills and Jessica Falzone truly make our offices run. They're the best.
She makes
I mean,
you-
They do look
They
good.
make us look really, really good. They do. And what's great about them is that we're educating the buyer up front to expect those emails and those phone calls from them to help them gather those last few documents, get the loan disclosures, and make sure that we're gonna make that closing date for them. And they're surprised, sometimes they get these late night emails and early morning emails.
Yeah.
And people ask if they ever sleep. But we're truly a company that was built from the operations out. And that was really the big thing that brought me to InterLinc, was the operational side of it, is that, we have an 8, 9, or 10 rule, is that these people truly are experts on the back end, our processors, our underwriters, and the fact that I can pick up the phone and call an underwriter and have a conversation with them about a situation and how we can make a loan work, truly is what sets InterLinc apart and what we're actually doing. These guys are absolutely brilliant on the back end of our deals.
Yes. Back to the loan limits. FHA loan limits have recently gone up, correct? So,
294,000.
294,000. When did that go up?
Start of the year.
Yeah.
Did it?
Yeah,
Okay.
yeah.
I knew it was recently, so I just,
Yeah, so those things are great
Is
too.
that all area counties? Or?
Yeah, and so in this area, we're gonna have those. And that, it just, again, allows those first-time homebuyers, as we're starting to see these areas being built out, it allows them to qualify in some of these neighborhoods they really wanna be in that maybe they couldn't get into before. You know,
Right.
$20,000 difference is a lot.
Right.
Especially in this area, you're talking a big difference in house.
yeah, it is. And then, so I guess just to kind of educate you, so you're telling us conventional, everybody always thought FHA is so great for first-time homebuyers, it's only 3.5% down.
Right.
If conventional is 3% down, why would somebody go FHA versus conventional? What sets it apart? Why do they have to go one way or the other?
The big thing a lot of times is maybe somebody doesn't have the strongest credit, number one. You can go, you know, we go as low as 600, sometimes even below with an exception on those FHA loans. Secondly is the debt to income ratios. You can get a little bit higher. So generally, conventionals, you're trying to stay below, you know, 45. With the Home Possible, Home Readies that we've discussed in our previous videos, we can go to 50, which is great. And that gives them a little bit more buying power. The FHA can go all the way to 56 on the back end. So 56% of your total debt plus your income can be, which allows you to qualify. This generally gives people a little bit more liberal guideline and
Okay.
help them qualify.
So what would the credit score again for that? You guys go as low as 600
600.
and up to 56%. Now on a conventional loan, what would the same scenario be?
We try to keep them above, you know, on the Home Possible Home Ready, you can go 640s, you know, we try to keep them above 640s, 660s. And the conventional rates, when you get those lower level credit scores, they tend to get a little bit higher. So that's where, you know, as we mentioned earlier in the comments, somebody commented on the rapid rescore. That's what we're gonna do, is try to get those scores up a little bit, so we get those rates better, qualify for your better loans, so.
Corey's
that's a-
correcting you right now.
What does he say?
He said FHA is 580 now.
Oh, we're now doing
Oh, wow.
580.
Wow.
And that's, we do have a credit committee that's gonna review that. It's not just gonna be, you know, we're gonna review those at our credit committee level and make
Okay.
sure that, and want to make sure that we're bringing in a good solid loan in there, so.
Okay.
And that's why I always have Corey. Corey's always gonna.
He's always gonna,
He's always
he's gonna be
gonna.
watching over you.
He's watching my move.
Oh, there, Ryan O'Connor, what's your question, Ryan?
We just talked about FHA and the increase in the loan capability, and how it's, sometimes FHA loans are better if your credit's not quite as good.
Yeah.
What about if we were looking at some homes that maybe need some rehab, because there's a lot of them out there on the market right now that are in that price point?
Yeah.
Is that still a product that you could do?
Yeah, we have a great home style renovation program. Go up to, you know, 95% loan to value. And those are nice, you just gotta get quotes up front. If you're gonna do that product, get a quote up front from a contractor so that we know what it actually needs to be done. Two, when we do the appraisal, we need to know what, if the future value is gonna be there with that work's done. But what's great about that program is, unlike the 203K with, you know, just be certain things done, you could actually put in a pool. You could take the house down to the studs and rebuild. There's so many options you can get creative with, so you can help somebody see their dream home, maybe if they want to be in a certain neighborhood that maybe doesn't have newer homes, or they're just kind of a little bit dated. They can get a new kitchen, new bathrooms, put a pool in, all sorts of really cool stuff. And we have contractors on site. The lady that runs it is a contractor, so she understands it, and making sure that process is going to go smoothly for you.
Okay, just to
How are those
recap,
loans?
what is the program again?
Home style renovation, and that is a conventional loan, 5% down,
5% down.
95% loan to value.
Okay, make sure, document this or not, email me some information on that, so that way we can make sure everybody has that.
Make sure you guys have those
Is it-
facts.
And does it still conform with traditional interest rate?
Usually a little bit, the interest rates on those, you're gonna have a little bit of higher interest rate because there's a lot of risk as that's being done.
Right.
And we're making sure, we're gonna hold that money in escrow with those contractors. And when we do that, you know, those contractors generally tend to get the work done pretty quickly because they wanna get paid. So, we're gonna make sure they're good, solid contractors, you know, licensed, bonded, insured. We check them out, vet them pretty good before that we agree to go forward.
Awesome. And then I do want to just touch on the Home Ready, Home Possible program again. I know some of us went over it with you, but not everybody, and I think that this is such a great,
It's,
amazing program. I can't say enough good things about it. So can you kind of just review real quick what that is?
yeah, the Home Possible and Home Ready, they're programs that allow people to put 3% down. They can go now to 50% debt to income ratio. Home Possible doesn't currently have an income limit in the area because of the Hurricane Irma, and we're still disaster relief. So we can go a little bit higher on those, a little bit better purchase price. So when you guys go make your offer, and you have the conventional, option or the FHA option, well, the conventional offer is generally more stronger and appealing offer to the listing agent. And two, on that, mortgage insurance that's gonna be on there, the nice part about it is it comes off at 80% loan to value, where in the FHA, that's on there. You're gonna have that mortgage
And
insurance
you're
for
gonna have
11
to refi
years.
out of
You're gonna refi out of it. And so, and two, one of the things we have now, as we discussed last time, is that MCC tax credit.
This is huge.
All the InterLinc guys, we're able to do this now. We can now increase your income $167 a month. So think about this, as our rates are going up, okay? You do have to income qualify, and I'll get you the income qualifications per county. As rates are going up, we can increase their income $167 a month. Well, here's what's really, really neat. We're a week away from tax season, right? Where you have your tax deadline, and you get your tax refund. Next year, at this time, they're gonna get additional $2,000 into their tax refund on top of that. So, very, very cool product, lets them buy a little bit more house, but I'll tell you what, on tax returns, how many of our clients would like to have an extra $2,000?
Absolutely.
Oh, yeah.
Into their tax return,
Yeah.
basically.
Yeah, I'm like,
That's the 2,000, but again, it allows them to have a little bit more buying power. I know we just closed a loan last week or the week before using that program. I have another client on there right now using that program. Very, very cool product.
And it really made the difference for her being able to qualify and not qualify for the house that she really wanted. She was, when we sent her over to Todd, she was so frustrated and so upset because she loved this house. It was the HOA and some of the taxes that were keeping her from qualifying. We got her this program, it got her the payment that she wanted. Now she's got this tax credit and everything worked out amazing. So that's awesome. I had another question, I forgot it now, so keep going.
Todd, is there a situation where the 203K still works better than the renovation loan?
Yeah, I mean, the 203K is a great loan. It's, maybe with some credit challenges, it's a great loan.
Okay.
A good starter home. It just depends on what work is gonna be done in the house. If it's a $125,000 home and they're just gonna be putting in a new kitchen, some new floors, 203K is still a great option for them. Either one, it's 6 1, half does the other. Once we turn it into a renovation department, they're experts over there. They get it done so fast in what they're doing.
Yeah,
So they're great.
Good.
awesome. Anybody else
Any
have
other
any
questions, guys?
questions?
Simple question, clients sometimes always want to check their scores. What do you think is the most accurate place for them to check their scores? I know Credit Karma is sometimes
Yes.
way off, so
It
they get
is.
scared, they don't want to call you first, they want to see their scores before they make that call. What's the best one that you've seen that's most accurate?
It's really, I haven't seen many that are too accurate. I mean, they can try to, because here's the problem with a lot of those credit sites is they only are giving one score. Well, when you apply for a loan, you're getting 3 scores. And I think the big misconception when they give us a call, they feel like they're going to buy a car and that it's gonna get pulled 20, 30 times as it's sent out. Well, with us, we're just pulling it once. And so, that's where the good part about having that, let us have that conversation with them, encouraging them to call, because we can build that rapport up front, make them feel comfortable, get to know them as a person, as a client first, because we're gonna be talking for the next 30 to 45 days as we pre-qual and they find a house and get through the process. So it's not like it's just you end up talking and texting with these people quite a bit, and by the end of it, they're asking about your family, their family, how the weekend go, they're calling you on the weekend sometimes, which is fine.
Yeah.
So if we can get them to do it, and generally the biggest reason people want to check their score is they have some challenges they need to overcome. And if we can talk to them and let them know we're gonna help them overcome those challenges to get them the house that they want, it's a much easier process for you guys as well.
And I think to that point, where, people who, they get worried and they wanna know what their score is, and then they see something on their credit and they're like, I'm gonna get this fixed, or I'm gonna do this. And a lot of times, this is where it's so great to talk to somebody. Sometimes trying to dispute something that was old or paying something off, it's actually gonna hurt your score
Yes.
more
Yeah.
than it is going to improve it.
Yep.
And so that's where there's so much misinformation out there. There's so many people that try to prey on people trying to sell products that are not going to benefit them at all. So I just can't stress enough for people to call and talk to a loan officer first, because that's why we refer to you, and we have, is because I know that you are there to answer your phone. And like you said, our clients, they become like our extended family. Like, we really truly enjoy them, and we want this to be a seamless process. it's funny, because this one now was 2 years ago, it came up on my time hop, that one of the clients that we sold a house to, they were first-time home buyers, Brazoni's, remember them?
Yes.
I'm gonna call them out,
I love
Brazoni's, I love Brazoni's.
They're some of our favorites.
They were, and she's like the sweetest thing, and she's like, everybody's telling me this is gonna be the hardest thing. She had like worked herself up that this was gonna be the worst thing she was ever gonna do, but she wanted to have a house. And we closed in 21 days.
It was smooth.
It was so smooth. She's still to say, she's like, everybody told me, get ready, this is gonna be awful. And we had just the best experience, and I still talk to them. I love them,
Yeah. For sure.
so. Yeah. Any other questions from anybody?
Everybody good? All right,
Okay.
well, thank you for coming in
Thank
today.
you, we
Appreciate
appreciate
it.
it.
Knowledge.
And then, can you get me that flyer again? I was really surprised with the limits and what everything was as far as percent down, credit score, debt to income ratio. You gave us a cheat sheet. I'd love to put that on our website for everybody to have a copy of that. So if you have questions and you want to recap what we went over today, it'll all be on the website. So thank you guys all. We're super excited. This is our first episode of Keeping Up with Real Estate. So, we'll be around again. If you have any questions, his information will be attached to this video, so we can get you in touch with Todd. So give us a call. Have a good day.
Thanks, guys.
Bye.
Bye.